as we've seen from the figures to today, 60% so far year to date has been roughly invested into offices. They tend to be very accessible in terms of lot size, in terms of asset management. There's not unlike retail where you've got multiple tenants. Office schemes have a little bit less. Generally very desirable in the sense that the WALTs, similar to the leases, tend to be sort of 4 years plus in most cases. Again, the GDP is supporting office demand with some a little bit of concern over labour supply, but again, most countries are doing their best to attract labour in from elsewhere. So I think the story there with offices is very positive, and that's been reflected in investment volumes. Industrial is always very attractive. The challenge is there that in the region we've got some very strong players who are long-term holders. Groups like Prologis, Segro, CTP, P3. There's only a very few number of players like Panettone, for example, who build to sell. So it's difficult to get hold of them on any large scale, but there's still some opportunity. Retail is very positive across the region, unlike some Western European markets. That's bolstered largely by the fact that there's some very experienced players developing that retail. There's high consumer demand, wages are going through the roof, so people have the money and want to spend and enjoy their money. So there is room for retail investment. It's not for everybody at the moment, mainly because of that sentiment that's coming in from elsewhere. So overall, it's a balance, but I think the story is quite positive across most of the core sectors.